to me, a bank is nothing but trust.
Mm-hmm.
So whenever we're launching or a new product, a new service, whatever lineation it is, I always kind of look at what's the worst case scenario.
Mm-hmm.
You know, if we grow this and then we have to get rid of it for, I don't know, any reason, what would be the impact? Could I live with that impact?
Right. Yeah.
And if you can't, then no, you're not going to do it.
All right, welcome back. Another episode of Expandable. And, if this is the first episode you're watching or, the 10th, just a reminder, Ryan James is the bank CEO here, Surety Bank, community bank. And so, and I'm marketing consultant, and I'm working with companies and helping them understand growth and scale and that kind of thing. And Ryan is actually, sitting in the role of CEO doing it with the bank, which is so interesting because I don't think a lot of people get to hear from a bank CEO about these kind of things. So the topic today is planning. Where does planning come into how you run the bank, and sort of like what forms does it take in your mind of how you approach growth?
Yeah, and planning comes in a lot of ways at different stages of your business cycle too, I believe. So, we've got an old institution. So the bank's been around for many years.
Right.
So you've got a lot of different stages of planning. I've got planning that I do on technology. So plan out the contracts on vendors across the board. So there's always ahead of time planning, when things are coming up. Certain things, if it's, 5-7 year type contract, then you're looking a couple of years in advance and you're knowing that. So that is always setting planning. That's always in motion.
Yeah. I'm
not publicly traded, so I love that. So I'm not planning for how does this quarter look.
Yeah, that
and
external
and I don't
party
want everyone
of shareholders.
Correct. So that is wonderful. And we're a subchapter S, closely held corporation, which also is great. So we can plan on the long term. We can build for growth and have foundation. So that is the type of planning that we look for. So, we know we want stability. We want to get, be here relevant for the next 100 years. So you've got different stages of planning, and then, all plans are change.
Yeah.
So how you get there is going to change the most. You just know you got to stay relevant. You got to hit certain targets and, different ratios. We don't really look at the bank as far as growth, like majority of banks go. They look at, we have to hit asset growth. We have to hit asset growth.
Right.
We're looking at operations and earnings and how that, portrays, because some years is just not a good year for lending. There's quality and risk is higher. Maybe liquidity out there is less. So there's years where, you may have the intention where you would love to grow loans, but that may be a bad time. You may have weak margins. The credit quality is weak. And at that time, your competition may be, we have to lend. Because that's typically banks. They just, every year, we got to build that loan portfolio. We have to grow. And so, but to me on the mindset is, there's some years where you got to look at it and, okay, this is not a good idea to grow in this. You're going to you're going to conservative. You're going to stick to the types of credit that you're most comfortable with. Yeah. And stick to your margins. And if that doesn't happen, you're not going to sacrifice and just grow for the sake of growth.
Right. I imagine that a lot of your planning is not built around last minute pivots, right? Like you're first of all, not in an industry that's so rapidly changing, but you're also not running the bank in a way that requires rapid change.
But I do things a little bit differently where I may have the end goal, but I will run, I won't just run linear on one project. We'll do 4 or 5 at a time. And as those are getting pushed, naturally things fall off. And, what was a good idea 3 months ago, 6 months ago is not working out. So I'm always running several ideas and projects at the same time until each one falls off from greater risk, and then you focus in.
Or it takes shape.
Yes. So
because a lot of your projects take a long time to
I think shape. People focus, I have to do this one, item. No, or this one form of marketing. No, do a little bit of several,
and it will find its
keep
way.
going. Yeah. Don't just go one path.
Yeah. So do you have a cycle that you like sit down at the beginning of the year and plan out the year, or, look at 3 years in the future, or like, do you have a hard and fast kind of planning regimen?
Strategically, in the financial world, they always want to see you do annual budgets, 3-year scenarios, and look at that. But over the years, and we do that, when you look back, I see banks, they try to just hit their budget. They're always focused on that budget. Meanwhile, just run your bank, put that budget aside.
Right.
Have what
it in
earnings
mind,
are
but
coming in. Yeah, that's a great idea. But a budget, I think people rely so much on that budget that it's a guess.
Yeah.
They, they're just, we're budgeted for this. We've got to hit this target. Well, maybe you can do way better. Maybe you can do less. Yeah. And so, budgets to us, when you've got, history and you've got a steady working machine, I think people put too much weight on budgets. Now, if your earnings are lacking, you're going here, well, then something's going on. You need to change and you need to pivot.
Right.
But I think budgets are a waste. And auditors will come in, and especially regulators, they think that you had this plan and that you must focus it 3 years from now. No, the economies change. It doesn't matter what I have planned. Things can change immediately in perception. So what has happened in the last 3 years of banking has been the concentration of deposits have completely changed. When I started in banking, people bought a lot of CDs, so you could lock in terms, 3 years, 5 years. It was not uncommon. Majority of CDs purchased were like 5-year fixed. So you would hold their money for 5 years, paying a higher interest. You don't see that nowadays. Those rates, a 5-year and a 2-year aren't much different. So people aren't going out there. You can't fix the rate. And then also the advent of, even 20 years ago, people were more likely to go into physical location. So now, I'm going to look for the best rate on my phone, go to, hey, what's the best CD rate in the nation? Okay, there it tells you. So anybody can go do that. So banks that were dependent on CDs, are gone to the wayside.
Sure, yeah.
So the composition of your deposits have completely changed. And when that changes, your style of liabilities, and when those may come, on demand, when people want to pull their money out or back in, you've got to be prepared for that.
Yeah.
If everybody's going to locked in, now you're at a set price. Typically, okay, you can, buy matching type assets and look at margin, but, the composition of banking has really changed in the last few years.
Right.
So people mainly.
So that changes how you plan or how you act.
Correct.
Yeah.
Yeah. It's got to. So, you had a budget, you got to stick to your budget. Okay. Well, now I'm looking at the real factors that are going on. I could give two shits about the budget.
Yeah.
So, that's what we focus on, is really the here and now.
Yeah.
Budget, great. You look at it later on.
Right.
That doesn't go into our mindset, because we're knowing each month how the earnings should look. And you just look at how, where are the areas? What are you doing? And keep looking at it.
Yeah.
Why did it change from month to month? But, because bank, you've got loans, they have payments. So you've got recurring mechanisms. So you generally know if it's fluctuating, what happened.
You said you look at the here and now. I think that's a really good explanation of how you plan. I guess it's not formalized, but you look out in the future and say, okay, well, what are we as a bank and where are we headed? What value do we bring to our customers in the market? But then as you're operating, you find the path that best suits the assets you have to offer the market. That's what I've seen and observed as you're operating over time is, you look internally to your team and say, we have these assets to sell. Our BSA team is growing, so why don't we lean more into that market and take on more clients?
Correct.
And so the here and now, I think, is it's an interesting balance, because I think you have people who are over planners, like kind of the budgeters you're talking about, and you have people who don't plan at all, and they kind of fly by the seat of their pants. And those people probably don't have a lot of structure behind how they operate anyways. So that balance in the middle of saying, I have this loose plan in my head of where we're headed, and have these, 3 or 4 things going on, And then in the here and now, I'm talking to vendors, I'm talking to my team, I'm talking to customers and the market, and I'm sort of taking all these inputs in, and it's formalizing into the new plan, which is the next day, the next week, next month.
And I've got a good example too. We recently, I can't even speak.
Yeah.
We recently had a change and a critical vendor, one that is long-term contracts that can extend 5 and 7 years.
Yeah.
And so that was long process of even coming to the point sign of a contract. And so there's so many different elements in there, and you're making decisions on what you want in the future. But first things first, let's get on new system. And you've already had these features. So now we're on new systems. You got to look, okay, now we are in the world of new system, and decisions that we made a year, 2 years prior may not hold up to today.
Yeah.
And so they looked and were great then, but now, okay, great. Yes, I made a decision. You got to make a change. There may be additional modules that, I don't know, we really don't need that. That's adding more layers here.
Yeah.
That's taking more effort of staff, and we're not going down that line of business because we see it's not profitable. But we like this module over here that we didn't sign up for. So, we're, having those conversations and looking.
Being flexible.
Correct. And just because, you had that commitment, okay, well, then go to and work out. We had this commitment. What about this? We agreed, pay X. We didn't know what we didn't know. Now we're in this, and, this is not going to create as much value for us, but this will, and then have that conversation.
Yeah. I think being flexible is one of the most important character traits of someone that's running a company. But then it's going beyond that and understanding how it impacts the flexibility that person has the ability to flex. So let's say you're fine with change, and you can switch from the mode that you're in to this other mode within 24 hours and say, okay, we're on a new track and it makes total sense, and this is the way we should go, and we don't want to let time go. Yeah. But then your whole team around you or the customer base, you have to be sort of empathetic to how it's going to impact their roles or their business or, whoever, judging and then acting on it in accordance to how it affects those people. Right. That's, I think, the key there, which I think that I've seen you do and do well, is this idea of saying, okay, well, we have a plan, but that plan's going to change. We know it's going to change.
Yeah, you're like, I know we need to connect these two systems.
Yeah.
But then how you get there is going to be...
So exactly. So you and your team then are on the same page, that we're all sort of working this loose plan, but we're all open to it flexing as we move through it, because it's going to change.
Well, I mean, your plan is a guess. It really is. So you have to, pay attention to what's going on, and just, you have that end goal in mind, but just know that plan is going to not be exactly what you thought at all. Yeah. And then if in my world, since, to me, a bank is nothing but trust. So whenever we're launching or a new product, a new service, whatever lineation it is, I always kind of look at what's the worst case scenario. If we grow this and then we have to get rid of it for, I don't know, any reason, what would be the impact? Could I live with that impact?
Right. Yeah.
And if you can't, then no, you're not going to do it. So that's the number one. Well said, I always look at the worst case scenario.
That's what you're planning
at each
for.
level. Want to stop and never put your business into that position that if it doesn't work out, you failed everything. No, I'm never going to put
which that gives you the freedom then to operate in this sort of mode of flexibility.
It's not a good product. It's not a good service if that could potentially take you out.
Yeah, and if it starts to show itself in that way, then you're like, okay, that's where we need to go a different direction. I think sometimes the way I like to think about everything we're talking about is business model. If everybody's on the same page as to the model that you are taking to market, that really can solve answer a lot of questions for staff and customers and everyone, because they understand how you interface with one another. And when you don't understand your model, meaning it's not clear to you and then therefore to anyone else, even your customers sometimes, then that's where things get, how there's a problem. You can do as much planning as you want, but none of it's going to work because your model doesn't work properly for the market. So I, because there's a big talk about business plan, and it's sort of like, well, you got to have some kind of.
I've never seen a business plan follow what they originally said.
Right.
It doesn't.
No.
And so the amount of weight people put on that is ridiculous.
But
now,
it's very academic, but you got to
who don't run businesses.
Correct. But you got to have some sort of plan. Like you have some sort of like, okay, here's what
framework,
we're doing.
Outline. Yeah.
Right.
And then
then after you start taking the next steps, that plan, I think, sort of becomes a model that everyone's agreed on, that we're operating, and it's going to ebb and flow and change through as we grow. Because that model, if it doesn't change, the model itself can change, but if it stays pretty much intact, then everyone's looking to the model for the plan.
Yeah. Yeah.
But I think the leader has to have a very good handle on what that model is.
Overall plan, I think, just needs to be as simplified as possible. Simple. So then they know to get there, it's going to change. Because if you have it all detailed out for them and, this didn't happen.
Yeah.
I don't know what to do.
Yeah. It should be, to explain it to a fifth grader, we're this and we do this for these people.
Absolutely.
And then if you can do that, then the question is, so what? And that's where your competitive advantage comes in. Because if you can answer the so what question, then you know why you fit in the market and why why we would build demand. I think that's maybe oversimplifying it, but it's really hard to make something simple.
Yeah.
That's why a lot of businesses, fail, because it's hard to stay in that level of simplicity, whereas, hey, all we're doing is this one thing. This is what we're doing.
Over the years, whenever we get examined, it's budget. All right, let's pull out the budget.
Yeah.
Oh, and they live and die by your deviation of that budget. And I'm thinking, how in the world did you guess every one of these expenses? Yeah. But really what happens is most banks, they just change their budget parameters regularly, whether monthly or quarterly.
To match what they're doing.
What's the point of the budget in the first place if you're going to do that? If you don't look at it over the course of time and say, why did we think this and this happened?
Yeah.
It's an asinine the way the process of the way it's typically done, or how examiners think it should be done, is not helpful whatsoever.
To me, I think that demonstrates lack of ability to think independently or think critically about a domain or a role.
I've had them where we would exceed our budget by income and a few projections. And then they're like, oh my goodness, well, you exceeded your budget, in a positive manner. Well, isn't that good? Well, why? Because, there were,
if we're making money
there
over
were
here, what does it matter?
circumstances that we were able to do more at this particular time frame that, we could not have foreseen.
Mm-hmm.
And so we were in position and we did it.
Yeah.
We made the decision. Well, it wasn't in your budget to grow next. Okay, great. So
it's like,
because it was in my budget, I'm going to miss out on these opportunities. Mm-hmm. No, we plan to be able to be in a fantastic position to, be there to.
Yeah. You run your business by the legitimate opportunity, not by the budget. That's the constraint.
Correct.
Yeah. But the constraint does sometimes provide for opportunities if you know how to look at it right.
Now, if you've got a history on operations and things running that way. Now, if you're just now starting the framework, the budget process, I think, is going to be more integral because you're figuring
set
out
things in motion,
earnings and everything, but now you've already got SETI. You already know the earnings. You don't have to go to you just know. If you're not hitting your margins, then you drill down.
Yep.
You don't need to look at every item.
That's right.
Every month.
Yeah. If it's not working, inspect it. If it is working, just do more of it.
Yep.
Cool. All right. On to the next one.